All right, let's stay on the markets here and bring in Noah Hamman. He is AdvisorShares CEO. Noah, always good to see you here. I have about 87 stocks to ask you about, but I want to start with Netflix. Out this morning, I know it's a company you follow closely. Goldman Sachs raising its price target into earnings. What do you expect from this company? The stock has been on a pretty big run. Can it continue?
I think it can. A lot more usage, right? It's sort of part of that whole work from home theme. A lot of opportunities relative to their original content and driving viewers there. And I think over time, as they manage things like various logins that people can use maybe on one paying account and try to control that a little bit more, you could see a positive impact on those earnings over time, in addition to the organic growth they're seeing.
Noah, I'm going to throw another stock at you. Disney going to be reopening parts of Disney World in Florida this weekend. What's your take? Do you hold shares of Disney right now? What's your take on the company's outlook?
We do. We hold shares in one of our ETFs, the ticker symbol CWS. We like that company. We've always liked it. We know they're going to have a tough time in the environment that we're in now. Certainly nervous about them opening up this weekend, but in some ways it'll be a bit of an experiment for those that want to go. And to see how that works out. And you see that in a bunch of different areas. We've seen it in sports as well, as they are going to start back up some games. So we like them. They will struggle for a while, but this is a stock that you want to have in your portfolio for the next 10, 20, 30 years.
Noah, Ines here. What about the semis? Today they're taking a bit of a breather, but over the last 5 sessions, they had been broadening the scope, if you will, of the tech rally beyond the FANGs. What do you make of them?
Sure. No reason for them to stop growing and seeing more growth, right? Everything's going to be moving more online, more cloud. You think about Netflix as they get more users, more systems, more computers, all of those things. And think about, every device that semiconductors are going into these days. So it's, it's going to be, normal market, right? Or some of these things, you'll see some growth and some pullback, but these same thing. It's another category you want in your portfolio.
No, we're making some pretty good progress so far on this giant stock list we had for you. But just more broadly on the markets, do you view, and do your clients view Joe Biden as anti-business and anti-stock market?
I don't want to say anti-business per se, but we think, a Biden victory puts a lot of pressure on the stock market relative to some of the things that he has been saying. So, one of our taglines that we put out this week was that, Biden might be bad for the markets, but a particular area we focus in, he might be great for something like the cannabis space. And he might be great for infrastructure as well. He's talking about spending there. So, that's where you have to bifurcate a little bit what's going on in the market and what's going on in the economy. He actually might be good for the economy, but we think not so good for the market.
When you say a lot of pressure on the stock market, can you give us an estimate? We had a guest yesterday suggesting that the S&P 500 could fall 25%.
That number doesn't surprise me. I'm not shocked by that number. Some of it's just a function of when they're actually in office, what they do versus what they say they're going to do, right? And right now, with the various Fed programs that we have in place that the administration has been backing, it produces a lot of liquidity for the marketplace. And so if that view and that approach and that policy is going to change a little bit, 25% down is not an unreasonable expectation.
Noah, it's something we haven't talked a lot about, which we used to a few months back, cannabis stocks, which I know you've been bullish on. How are you feeling about them now?
Well, talking about Biden, they just released that Biden-Sanders unity pledge that covers a lot of different things, but one of them is a focus on cannabis. And so what they are pledging to do is actually to decriminalize, deschedule cannabis as a level 1 narcotic. That would allow, and they're saying they would allow, federal legalization, but for medical use only. But that's a pretty big deal. It's a big deal in terms of doctors' ability to prescribe it, including VA doctors. It'll be a great possible solution for some patients as opposed to using opioids to manage some of their medical issues. And then think about pharmaceutical companies who could really start to get their hands on this and try to figure out what other opportunities there are with this plant. So we think it's going to be great if he becomes president for that space. And so now keep in mind what they are saying for states and recreational uses, they're going to leave it up to the states. But still, the descheduling, the decriminalization is a huge step and is going to create a huge growth opportunity, but probably mostly for those U.S. cannabis companies.
Staying on the healthcare topic, Noah, what are some ways an investor can play biotech? It continues to amaze me how quickly some little positive incremental news on COVID-19, like we saw out this morning on remdesivir, Gilead's drug, could turn the markets positive.
Right. It'll be an interesting, almost contest or a race, right, to see which of these companies, I think Gilead, of course, announced something this morning as well, to see which ones come up with something, right? The first one to do it, whether it's a meaningful treatment or it's actual vaccine, it's going to be a jackpot, but knowing which company is actually going to do it. And I actually should probably, temper back the whole jackpot kind of view, right? I think some of these companies, there'll be a lot of pressure around where they price this solution, the drugs that they can make to try to treat it. A lot of pressure to make it affordable, which is great. That's a nice and a good thing to do, but then maybe you're not going to have the margins and the upside in producing that product that you think you might. But nonetheless, I think this is an area where you probably don't want to bet on just one horse. You want to have some exposure in your portfolio. It's going to be an area of growth. This is not the last virus we're going to run into. So companies like that are working on a solution, also good opportunities for your portfolio.
I want to get back to Joe Biden for a moment, because yesterday he came out with his economic plan. If he were to become president, part of that, surprise, surprise, he wants to raise the corporate tax rate from 21% to 28%. Could have been a lot worse. Do you think that Wall Street needs to be worried, or could a Biden presidency be a good thing for investors?
It'll be a change, right? So, and I think overall certainly could be a good thing. And then I don't know if Wall Street should be worried. It's actually nice that we're getting an advance notice as to what's coming, right? And so the smarter people on Wall Street and advisors who help investors, manage their portfolios, you kind of know what's coming. And we don't know what the outcome obviously is going to be of the election, but if that's, if Biden's going to be the president, then we know the kind of policies he's going to be focusing in on. And hopefully he is sticking to what he is saying, right? Sometimes things are said to try to generate votes that maybe don't actually happen once they're in office. So I think knowing what their approach is going to, put investors in a good position and know how to manage their portfolios. And again, it could be down quite a bit, again, from a market perspective. Maybe jobs go up and the economy is better, but it could cause some stress in investors' portfolios.
Well, no, let's take the other side of this coin. I think the conventional wisdom out there on the street is that 4 more years of President Trump might be pretty good because he would keep his signature tax cuts in place. But is that the case? Because along with that, you're getting 4 more years of chaos in the White House.
You are. And in some ways, you look at the marketplace now and you think, all right, if Trump is staying in, is there that much upside growth ahead of us, knowing all these underlying economic issues that we have that the market doesn't seem to, at least right now, be pricing in? But what we do know is, he sort of measures his success by where the market is, and we know he's gonna, if he gets 4 more years, he's gonna want to have that time frame, really be end on a high note for him, I guess. And so we know what they're going to manage, and their policies will be focused on. And it's the same thing. You just try to adjust your portfolio to that, even in the environment that we're in today, as you point out, sort of amid some chaotic environments politically and in the U.S. today, you at least know what's coming. You can try to manage your portfolio accordingly.
Noah, what's your biggest call into earnings season?
That's a good question. I'll go to the cannabis theme again. We like that. With states coming more online, I was looking at the performance just in this recent turnaround we've had, right? So the last 3 months, the S&P 500 is up 14.72. Amazing number, great number. Look at the tech sector that everyone's been so excited about. That's a great place to be probably coming into earnings. And they're up in the last 3 months, 26.92%. Cannabis, and I'm using our YOLO ETF because it's the only ETF that has that US exposure, that's up 34.86%. Now, it's a more volatile ride, but I think, you look at tech, you look at cannabis, you can look at the semis, you can look at big box retailers, and I think those are the good opportunities coming into earnings season.
Wait, the ticker on that is YOLO?
Yes, YOLO, absolutely.
You only live once. All right, well, there you go. You hear just about everything on the first trade if you stick around long enough. All right, let's leave it there. AdvisorShares CEO Noah Hamman, YOLO to you.
Thank you.